Hello, everybody, and welcome to the Cyclical Investors Club YouTube channel. My name is Corey Kramer. Today, we're going to be doing something a little bit different. I went through my list of requests that are up here on the whiteboard, and I was working on one of those that was just kind of fell into the too hard category, and so it ended up being, a pretty short video, and I didn't really have too much to say about it. And I thought, well, there's probably some more like this, so why don't I just go through, make a list of the ones that look like they're going to be too hard for me to analyze using the approaches and the strategies that I use, and just put them all in one video. So that's what I'm going to do, and then I'll just explain why that's the case. Now, sometimes people kind of read into this the wrong way and think because I think it's too hard that nobody can analyze them or figure out what they're worth or what's a good price to pay for the stock is. That's not what I'm saying. What I'm saying is I have a certain skill set, a certain, circle of competence, as Warren Buffett might say, where I know pretty well what I'm doing, or I at least know the odds of whether something can go one way or the other. And I know exactly the type of profiles and metrics and things that I want for the stocks that I want to own. That doesn't mean that's the only way to do things or the only way to find good investments. That's not the case. My approach is meant to sift through stocks really quickly, do a lot of the work up like in a very fast manner, and then when that list of stocks gets down lower, to do more deep work if that's necessary. So what I don't do is take, a given business and then, do a deep dive on it. If it looks like it's not even close to, even if everything was perfect, it would be too expensive, way too expensive for me to buy it. I'm just not going to spend a ton of time on something like that. Or if it's just something that doesn't fit with the strategies that I use, that's okay. I just move on to the ones that do, because I know there's going to be opportunities that I miss, that I just don't have the ability to have a high probability of getting right over and over again, or a certain percentage of the time, compared to the percentage of time I would use the same methodology and get it wrong. So let's get into these. Start with Solventum Corp. So the main issue with this stock is that, so the healthcare supplies, $12 billion market cap. It looks like they have quite a bit of debt. Total enterprise values $20 billion. But the main thing is, this is probably spun off of something, I'm guessing. But there's not enough data here to see. First of all, I always want 2 years of data, almost always. If it's like a total segment of a bigger business that I can easily understand and have some kind of data on, maybe with a peer or something like that, there might be a few exceptions here and there. For the most part, if there's only a year or less than a year in this case worth of data, I'm just not going to buy it. First of all, if it was a spinoff, there's usually a reason they're getting spun off, especially if they're getting spun off with a bunch of debt, and it's usually because they don't have growth and the other business that owns them wants to get rid of them so that the good part of the business, or the faster growing part of the business anyway, can grow on. And if they can, they'll cash in on retail investors and individual investors, other investors that come in to buy these spin-off IPOs and everything else. So I don't really want businesses that aren't growing and that nobody else wants most of the time. There's been one or two exceptions over the years where I look back and I was like, oh, that one ended up working out okay. But honestly, 9 times out of 10, especially in the first 2 or 3 years, I just stay away from them. So this is just not enough information here for me to even go look at more information, because even if I had everything else I wanted, the data is not here using the type of analysis that I usually do, that I would ever buy it. So, okay, Crocs is another. What did I pull up here? Crocs is another one. I made a full video on this, I think, over on for Patreon. So the thing with Crocs is that it goes through cycles, and we just never really know like how long they're going to last, or how strong they're going to be. And it's kind of like that with this type of kind of specialty retail anyway. So they had a big cycle back in the mid 2000s. That was the first time. I do have Crocs, by the way. I actually love Crocs, but I don't love the stock. So it goes through these booms. That was the first boom. I remember I was down in the Virgin Islands and people were coming off these catamarans and all the kids and some of the adults were wearing these Croc things. I don't think I'd ever even seen them before. And it was like in 2007, I think. I had some friends that were getting married down there. And I was like, what the heck are these things? And then I came back and the stock, it was very super popular at the time because it became like a fad sort of. But once the recession hit and people decided that they hated them, it fell almost 100%. It fell like 99% basically off its highs, or 98%. And they started losing money. Excuse me. So, and then they came back a couple years later. So it was like, okay, they didn't totally disappear. People still like me still bought Crocs every now and then. And then they kind of had another down cycle, right? And then they were kind of recovering again. And then now we're in like this total boom, where everybody, decided that, my fashion sense was absolutely correct and that Crocs were cool again, which I could have told them, back in 2008 that was still the case. And I think they've expanded into some other areas of like apparel and stuff too. But so we have another boom. And the thing is, I just have no idea how long this is going to last. I mean, every 5 years I'll buy a pair of Crocs, whatever, still, as long as they exist probably. But, I was out kayaking and I wore my Crocs earlier today, so I still use them. But I have no idea when everybody else is going to decide Crocs aren't cool anymore, and then we have negative earnings for a few more years, and who knows how long that goes on. So since I can't predict any of that, I just stay away from the stock. But if I was ever going to dip my toes into it, I wasn't even trying to do that, but I did anyway. I would want to do it during one of these down cycles where like earnings are totally negative, everybody hates it. You can get it at $6 a share, and then if you get lucky, you get 1,800% return. I'm like, okay, even if we went pre-pandemic, right? You're still looking at a 500% return at 100% CAGR. That interests me enough to be like, yeah, I mean, I don't know if Crocs will ever come back in style, but maybe I'll be willing to take a small position and see if it's one of these lucky near the bottom times where you can get 1,000% return. Like, you could tempt me then, but you're not going to tempt me when it's, close to all-time highs. So that's my thoughts on Crocs. I didn't mean to rhyme there either. Okay, let's go. Dell Technologies. So Dell, I think these guys just got added. I don't know if there was two different Dells, but I think this is the one that's getting added to the S&P 500. I still need to make a video about my hatred of this edition along with Palantir and Supermicro and all these other companies. It's not so much the companies themselves. It's that they're clearly in a boom, right? And basically what happens is they get added to the S&P 500. A bunch of people with 401ks are now, and that have S&P 500 funds, are now obligated to buy it. And all the people, all the traders that were buying down here and pushing the price up this whole time, they're all, getting 200% returns. Actually, in my research, in the 12 months leading up to these, it was over 100% return. And I had like 50 stocks that I did research on in the past 4 years. So I don't like to see traders taking advantage of people that have no clue what they're doing and that are just, buying index funds and stuff. But that's what's going on with Dell. But if you look at earnings, I mean, they're going nowhere. And if there is a different Dell, I think this is the only one. But I know they went private and came back, and I don't remember if they split. It looks like the only one. So hopefully I'm not totally wrong. I've never really looked closely at it because it doesn't have very much data. Like I said, that's not enough for me. The data I see here now doesn't look good. So this looks like total hype so far, I guess. I mean, but maybe they have some... maybe there's some metric that I'm not seeing here. Maybe revenues are growing at 40%, and I don't know. I know Wall Street was happy with the report not too long ago, I think. But although this one doesn't look so good. But at any rate, I have no idea to predict what's going to happen with this. If I did have to predict, it goes down. But I'm not making that prediction. I'm just saying, if I don't have a reason to think the business is that I can predict the earnings, and therefore it will be able to predict the stock price, then I don't buy it. It's too hard. So GE spent Vernova, one of the GE spinoffs, I assume. Again, if it's so great, why was it spun off? I don't know. Do they have debt? Not really. That's kind of nice. So I don't. Maybe this is the healthcare. Kind of sounds like a healthcare type. Oh, did I just look at it? Yeah, electrical equipment. Okay, so not even close. Yeah, there's just not enough data here to do. If you wanted to go look up and maybe GE broke out a bunch of stuff like of their segments and things, if somebody wants to go do that, I mean, that's fine. But that's not something that I am going to. I was trying to see. I lost something here. My fast graph. Okay, let's go. Okay, so the original stock, this is actually a little more interesting, was Corpay. Was the first one that why I probably accidentally I slid sideways and I screwed up one of these metrics. I'll probably have to go. I wonder if I slide backwards if it comes back. Nope. I'm not sure if this is free cash flow. Free cash flow. There we go. All right, just had to click a couple buttons. All right, so now we're back to adjusted operating earnings. Okay, so these guys, I almost bought them back when they were FleetCor during one of these drawdowns, and I don't know, they were involved in some lawsuit or something, and I didn't really like the looks of that at the time. And I think they do like payment, like business payment systems or something. It's kind of changed a little bit over time, I think, but the main reason that I've kind of not bought it is they're really acquisitive. So the kind of like a roll-up deal. They're buying a lot of these small payments or payroll processing and stuff like that for businesses around the world. And I just don't usually invest in those type of businesses where they're constantly buying other smaller businesses. Because there's a lot of execution risk that comes there, and there's a lot of, well, like if you I tend to use adjusted earnings, and then they usually don't tell the whole story when that's the situation. And for these guys, you need to go down to operating cash flow. And so if you look at their operating cash flow and the stock price, that's pretty much what causes the stock to move up and down. And it looks like it's fairly cyclical, or at least sometimes pretty volatile. If you look here, if you look back at 2012. So I don't feel like I can confidently extrapolate out history into the future. Now, I've read that they have excellent management and everything like that. That's totally the case, but that's not really my forte of like being able to judge, using the kind of methods that I use. And then I don't know how long they'll be able to do that. How many... Usually it gets to a point where either the market for acquisitions gets really high and then these companies pay too much, or they just don't make good investment choice, like they just don't make good choices. That doesn't appear to have happened yet with these guys, not for any sustained amount of time. But I just don't think that the way that they performed historically in this case, it's not like you're creating a widget that you're going to keep doing over and over again, and kind of growing that way and expanding markets for the widget, right? It's just a different, which is normally kind of what I like to do, or a service or whatever. So it's just not really my kind of forte. So I was close to buying this one, and I was just like, I'm just not going to do it. So it was kind of borderline. So yeah, but ultimately too hard for me, I think. I don't think I have enough expertise to know whether they can keep growing like this for another 5 or 10 years. On Jumia Technologies, German retail, kind of $500 million business almost, maybe a little less than that. So I'm not sure exactly what these guys do, but looking at the stock price chart here, and it looks like they've been losing less money, so they're probably growing pretty well. There may be some point in the future, once they start actually earning money, where I might consider something like this for growth. But usually retail isn't like my favorite place to go for like an early stage growth company. But I think if they were profitable and they were growing revenues over 20% at some point, then I would look closer at it. But right now, it's just not really close enough to where I would get interested in just spending any more time on it. Like, I don't know if this price, if $4 is the right price, or if $20. Like, I wouldn't know I wouldn't be able to really tell at this point. I need to see a little bit more. I need to see earnings a little bit more close in the future. But it might be worth like keeping an eye on over time. So I think those are the 1, 2, 3, 4, 5, 6. Those are the 6 that jumped out at me as just I probably wouldn't be able to make like a decent sized video on anyway. So I thought I'd at least go through and explain a little bit. It's always kind of weird because it's like I'm explaining what I don't know basically. So it's always kind of and a person could be like, well, why don't you go spend time and then learn about it and then make a video? It's like, well, that's just not how I do it. I don't spend time on things that don't look somewhat interesting to me, or at least that I can't like theoretically kind of fit into my models that I use. I don't think I'd be doing anybody any like service by trying to pretend I'm good at doing like predicting Jumia Technologies. It's weird that it's technology and retail. Maybe it's online retail. That's maybe my guess. But I wouldn't do anybody any good trying to do a bunch of work on something that's just that I don't know very much about. I'm investing in businesses, yes, but usually I lean a lot on history as one of the core. I mean, most businesses and stocks fail, so it's important to understand that. Most of them, the majority, will totally fail and lose money over time, and so I start with the notion that look, that most of these are not going to be worth my time, and the ones that have succeeded over time have had earnings that have grown over time, and so the easiest thing to look for is earnings that are growing over time. Or if it's an earlier stage business, the potential for earnings to grow at a good rate over a long period of time. And so if I look at most of these stocks, and then usually there are a few categories where, kind of like with Corpay, where if you go look at like the businesses that have lasted 50 years, there's not too many of them that are just going out and buying up small. Well, look at GE, right? We saw one of their spinoffs at least, and it's because that's what they did for 20 years or 30 years. But then they got to a point where it just all fell apart, basically. And you don't see many businesses that are doing that type of thing that really last a long time. There are a few that are pretty good at it, for 10 or 20 years. So I don't want to say there's none, but if I excluded those very, very small number, and I never got a chance to buy them, I think that's okay. I mean, I would probably fail way more time trying to decide, oh, this is going to be the one of those ones that ends up being a 10-year winner. Rather than the one that doesn't, that I lose a bunch of money on. So that's kind of how I think about it all. All right, so hopefully, even though you didn't get any kind of a deep dive into these 6 that you asked for, you got a little bit more information about how I think about investing in the market. If you found this video useful, hit the like and subscribe button. And if you do have a request, go ahead and put it down in. And if it's something that kind of fits what I do, I'll make a longer video. Thanks for watching. Later.